Hello, welcome again to FAIRtax Power Radio. I'm Bob Paxton.
And I'm Ron Malero.
And we are
the FAIRtax Guys,
fighting for truth, justice, and to defund the IRS because taxpayers matter.
Yes, they do. Yes, we do.
Yes, we do.
So,
we matter. Whether they want to believe it or not. We have got a lot to pack into this episode.
Yeah, we do.
Today.
So
you have come up with a bunch of goodies, but first, I'm going to dig into Congress.gov for a few. I'll go as quickly as I can. So
okay,
you don't
tell them what we're doing.
Don't bring the hook on me. Yeah, we're going into Congress.gov, putting the words Internal Revenue Code in quotes there in their search engine, and seeing how many hits come back on that search. And as of our recording day here on April 16th, 447 hits on that search when you're looking for and that's just legislation within the current Congress. You have to filter that out on the left side.
That works out to 8.8 proposals per day that Congress is in session to change our tax code.
They just love monkeying with the tax code. I say we'll run through this really quick. This one actually looks fairly familiar, even though it was only introduced yesterday. H.R. 2576 to amend the Internal Revenue Code to reinstate estate and generation skipping taxes. I remember hearing that phrase from a little bit earlier, and for other purposes. So they keep doing the same things over and over and over again.
Yeah, they do.
How crazy is that? H.R. 2573 to amend the Internal Revenue Code to reform the low-income housing credit and for other purposes.
Reform the low-income housing credit.
Yeah, and unfortunately, when we do this by date of introduction, it takes a while for the text of these bills to actually show up on Congress.gov. So some of these things, all we can go by is the title. And of course, we get the text in there, and it's thousands of pages long. We can't begin to get through it all.
Yeah, and reform could mean just about anything.
Absolutely, it could. Now, here's another one. H.R. 2549 that the Congress critters are trying to do, to amend the Internal Revenue Code to allow workers an above-the-line deduction for union dues and expenses, and to allow a miscellaneous itemized deduction for workers for all unreimbursed expenses incurred in the trade or business of being an employee. You got that?
Oh, wow. That's amazing. Holy cow, that covers a lot of ground there. It just make just about everything that they encounter as a deductible. Okay,
it works on it. Yeah, an above-the-line deduction for union dues and expenses, and a miscellaneous itemized deduction for unreimbursed expenses incurred in the trade or business of being an employee. If people are in the business of being an employee, how cool is that?
Yeah, but they already have that. I mean, I did that when I was employed, and I had business expenses. It's Form 2106. I'm not sure why they need another one, but
I don't know. Okay, Mr. Chemistry Teacher, explain me this one.
Okay.
This is a S 1191, a bill to amend the Internal Revenue Code to include, get this, biomass heating appliances. That's what I want you to explain to me. What is a biomass heating appliance? But those things are to be included in the energy credit, and to extend the credit for residential energy efficient property.
Ah, okay. Biomass. So that's
heating appliances are now going to get
they're making diesel fuel out of not kelp, but and the word escapes me, but they're taking biological entities and transforming them into fuel. They're actually making diesel fuel.
You're not thinking cow patties, are you?
Right? No. This is a little different. It's a little more pure and so forth. So biomass could be a lot of different things, all right? A lot of different things. But they're taking trees and plants and one-celled organisms and things like that and creating and transforming them into fuel, and they want a tax credit for that.
Oh, mercy. Okay, one more here real quick. This always catches my eye when they talk about this. H.R. 2466 to amend the Internal Revenue Code to include armor-piercing concealable weapons. I want one of those. To include armor-piercing concealable weapons within the definition of firearm under the National Firearms Act and for other purposes. So they want to include these armor-piercing concealable weapons with. Why are we defining firearms in the tax code?
Yeah, and why wouldn't they be? I mean, if it's a firearm, it should be in there. It points out some of the craziness not only in the tax code but in other parts of the legislation.
Yep.
And like Bob says, that has to do with I would think the Department of Alcohol, Tobacco, and Firearms.
I guess.
So again, why is it in the tax code?
But it's in the tax code to include armor-piercing concealable weapons within the terms of within the definition of what a firearm is, and that caught my eye because earlier in the year I put something in the Hall of Shame that we're going to get into at the end of the year, because they have another one up there. This is H.R. 1758 to amend the Internal Revenue Code to remove short-barreled rifles from the definitions of firearms.
Yep, I remember
so
that.
now they got the tax code taking something away from it. This is not a firearm, but this is, and it's all crazy, and it all goes away with the fair tax.
That's right. All right. Let's just make our taxes a lot simpler and not use the tax code to modify every aspect of American life. Let's just have a simple consumption tax, a sales tax, and get rid of the income tax and the IRS.
I'm going to have to ask Tony if he can get me one of those armor-piercing concealable weapons. So
that's a discussion for another
day. But you can't get that through security at the airport. Okay, I'm done.
Okay, all right. Now, I want to bring up, I think it was Randy, I can't remember exactly who, that brought up this announcement here. FAIRtax would simplify and make taxes more fair, according to the National Small Business Association. The National Small Business Association, they have done this in the past, but this is dated recently, February 22nd, so it was not too long ago. All right, National Small Business Association is endorsing the FAIRtax. Now, and they go on with, why the FAIRtax is. There's no point in our going into that. But the point I want to make, this is the National Small Business Association. Is there a National Mega Business Association?
Probably off the record somewhere, but I tell you what, that gives me a good opportunity to plug something that's going to happen next week on FAIRtax Power Radio. Next week is our Wally's World. We're going to talk to Jade Wally, and he's actually going to talk about how some of the larger retailers are resisting the fair tax and why. So if you want to get in on that discussion, catch us next week.
Yep, and that was my point, that the National Small Business, the fair tax will really benefit small businesses because for many of these folks, the cost of complying with the current tax code is a bigger cost of doing business than the tax itself, okay? Yeah. However, we found out in the past that the mega corporations, they can afford lobbyists.
Yeah, so they think they're buying. Let's not give away Jade's discussion too much. So the small businesses are on board quicker than the large ones, which is kind of counterintuitive when you consider all of the advantages that the fair tax brings to businesses in general. Zero corporate tax rate, and your compliance costs go away.
Yeah,
that's all we need to say. We'll let Jade deal with that a little bit more next week. But so you've got some cool stuff from Politico here.
Yeah, because again, the large corporations, they hire lobbyists to try to modify the tax code to benefit their business, okay? Well, I've mentioned this before. The organization Politico, they send out a weekly newsletter called The Weekly Tax. And I've got several, I've got four of them here.
There's been a lot of discussion in the news recently about raising corporate taxes.
Yes.
And let's deal with the subject of corporate taxes here this week.
And that's what I want to talk about here. This one is from March 1st. Now, some of this information... Oops, I got the wrong one up there. I got to get the correct window. Okay, this one is from March 1st, weekly tax, and it says, well, that was quick. Leading Senate Democrats dropped their plan to tax businesses as a backdoor way to increase minimum wage, and just days after floating the idea as a backup plan. Okay, but while using the tax system to boost wages is now out the window, Democrats are still finalizing some other plans that they, as they try to get a bill to Biden's desk by mid-March. Now, again,
don't they realize that people pay corporate taxes, not corporations?
Well, and the other point, yeah, and we've made that point over and over again. The other point here is that originally they wanted to have a bill to increase the minimum wage to $15 an hour. Okay,
They want to increase the cost of doing business.
Exactly, and to pay for that, they wanted to increase corporate taxes. So,
wonder what the price of a hamburger is going to be if all that goes through.
I mean, first they want. It sounds good about increasing the minimum wage, but when you get into the real world, which unfortunately some of the people in Washington D.C. do not live in the real world. They certainly don't live in the private sector. They've been in the business, the public sector all their lives. But you're going to. They wanted to increase the minimum wage, which is a cost of doing business, and they wanted to pay for it by increasing corporate taxes. I mean, just that's so wrong and so misleading on so many levels. All right, that they didn't stop to think about what they're doing.
It looks good on the surface, but you don't think it through and don't realize that when you in effect raising the minimum wage is going to increase companies' labor costs.
Yeah,
which means might be a good thing for those who don't get laid off.
Yeah, exactly.
But some folks are going to get laid off.
That's right.
And an increase in the minimum wage will send your wages from $10 an hour to $0 because you get a pink slip.
Yeah,
they don't figure that.
Yeah, I know. I guess they have the feeling that corporations just have closets full of money, and they're going to have to pay for this no matter what. No, corporations have to make a profit, or they're not going to stay in business.
Corporations have the ability to pass their costs on to their consumers, and they do it.
Yep, the consumers, their employees, and their shareholders. Yeah. People always pay for those costs.
Yeah, real quick, Steve Hayes mentioned this in a chairman's report a couple of weeks ago. What happens, the politicians say, well, instead of raising prices, you should just decrease your profits a little bit. Yeah. And Steve talked about what that does. That decreases your stock value, how many pension funds own that stock. When you depress the stock value by doing what the politicians say they want to do, that affects individuals in a nasty way at the same time. So
that's right.
Go back and read that chairman's report from a couple of weeks.
Yeah, that's a good idea. All right. Okay, now the next one is, again, this is Weekly Tax by Politico. This one's March 22nd. And the first article here, ready to go. It's become a regular occurrence during the first 2 months plus of Congress. Progressive lawmakers introducing expansive proposals seeking to squeeze more revenues out of the rich and corporations. All right. Take just 2 examples from last week. Senator Brian Schatz, Democrat from Hawaii, rolled out a financial transaction tax. So every time there's a financial transaction, he wants to apply a tax to it.
Reminds me of a little song I heard. There's a tax here and a tax there, here a tax, there a tax, everywhere a tax. Okay. And they don't pay to hear me sing.
Senate Budget Chair Bernie Sanders from Vermont pushed the measure that would raise taxes on big companies where chief executives make at least 50 times more than the median employee. And I think you talked about that.
I think we found that in Congress.gov.
Yeah,
one time where they're saying they're going to sock you with a big tax if you pay your CEO too much. I don't think they mentioned CEO by name. They said your highest paid employee.
Yeah.
If your highest paid employee is paid higher than the average of what everybody else gets, we're going to sock you with a tax. Don't you just love the way the tax code goes after free enterprise?
I don't think people like Jeff Bezos, who runs Amazon, would really appreciate that. That's a huge corporation, employs thousands of people, and yes, he makes a lot of money because it's very successful. All right, he's a very successful businessman, and he takes I don't know what share of the profits he takes, but he's a multi-billionaire now.
But did you notice that he refused to come testify in front of the That's part of the article too, Jeff. So, no thanks, Bernie. I'm not going to talk to you about this.
Yeah. Again, another example of the people in Washington living in another world, all right, and not truly understanding how the corporations work, okay? Yeah, some large companies, there is quite a difference between what the highest paid employee and the average worker makes. That's the nature of the beast. That highest paid employee, if that's the CEO, he or she is responsible for the functioning of that entire company.
People don't understand just what a tremendously difficult job being a successful CEO is. They think the successful CEO, all these do, they sit in their nice corner offices and just dictate to everybody everything, and they rake in all this money and they don't do anything to earn it. I'll tell you what, I would not want anywhere near the amount of pressure that would come with that job. I mean,
no.
People think about it. If you don't run your company successful, depending on how big it is and how many, you could be affecting hundreds, if not thousands, of tens of thousands of the people that work for you.
That's right.
If you can't steer that business in a profitable direction, and not everybody can.
That's right.
I mean, if everybody could be a CEO, if it was an easy job, everybody would do it. It is not. Those guys earn every dime they make, and gals too. They're female CEOs,
and their job is on the line too. If they do screw up, they're gone. Mm-hmm. All right. So, anyways, okay. The next one is from March 29th. Again, this is Politico's weekly tax. The week has come. President Joe Biden is scheduled to roll out the next steps of his fiscal and economic priorities in Pittsburgh on Wednesday, which is expected to include trillions of dollars worth of ideas on infrastructure.
Yeah.
Okay. So, and as we've learned, if you've paid attention to the news recently, you've come to realize that for President Biden and people on his side of the aisle, infrastructure now has a very broad definition.
Yeah, it does. And I say that this has come out since this Politico thing was written. So the Wednesday they're referring to has happened a few weeks ago. And we could get into that. But the whole, again, it's not going to work the way they think it will.
No.
Because it's just the economic reality that doesn't work that way.
And to perhaps to make more, even more to the point, how much will they seek to raise taxes from the better off and the corporations? All right, the Biden team is envisioning higher taxes on corporations picking up the tab for the infrastructure, while tax hikes on the rich would fund new initiatives from families for families and education. Okay, and again, I mean, we've seen this. When the Democrats are in power, they believe everything that happens in America should go through government. The federal government should structure everything. They want to raise taxes because they want these infrastructure changes.
But have they not seen the studies that somebody has actually crunched these numbers? How much you would get, how much federal revenue would come in if you took every dime away from people who made more than $200,000 a year? It would not begin to cover what they want to spend, and they just figure the folks aren't going to pay any attention to that. They'll buy the talking point. Yeah, we can finance this by increasing taxes on corporations. If you took every dime from the rich, you couldn't do it. The math just doesn't work.
And plus, targeting segments of the society for different tax treatments never turns out well. It never turns out well. It always has unrealized consequences, unanticipated consequences that they didn't think of, and it just makes a mess of things.
Yeah, corporations will pass their increased burden on to their customers. Rich people will move their money out of the country, put it in the Swiss bank account. So the people that are being targeted have the means to avoid a good bunch of this. So it's just not going to work as advertised. It never has.
No. So anyways, all right. Now the last one here is April 12th, and we're recording this on the 16th, so this is just a few days ago. These weekly tax emails come out every Monday. Okay, let's talk about the numbers. It's been a key part of President Joe Biden's argument for hiking taxes on corporations. Current revenue collections from big business are out of whack. Ooh. That goes for the U.S. as a historical measure. Over the past 3 years, corporate tax collections have fallen to their lowest level since World War II. And they have it in terms of the percentage of gross domestic product, okay? 1%, and this is according to Treasury Secretary Janet Yellen. However, I have, and I've shown you this before, I have some graphics that show that in 2017, as a percentage of the total revenues that go to the federal government, how much do you think corporate taxes are? This is in 2017, okay? And I've done this at meetings and people, say 50%, 25%, okay? It was 9% in 2017. Total revenues going to the federal government from income tax, payroll tax, excise tax, and everything, the corporate tax only contributed 9%, okay? Then, in 2019, and I don't have anything more current than 2019, it dropped down to 7%. Well, yeah, because in 2017, the President Trump and the House passed the House and Senate passed the Tax Cuts and Jobs Act, and that lowered the tax rate for corporations.
Dropped it down from like 30-something to 21.
Yeah, 35 to 21. Dropped it down a lot, and the result was a lot of booming economy. I mean, a booming economy, okay?
But so I'll point out that the Tax Cuts and Jobs Act was tax relief. It was not the tax reform that the fair tax is.
That's right. That's a good point. But I also have some information here on the total revenues going to the federal government from 2016 up to the current year, okay? Well, in 2016, it was 3.27 trillion, okay? In 2017, it was 3.32 trillion. Okay, that's a difference of $50 billion, okay? It increased $50 billion from 16 to 17, okay? Then in 2018, not much change, 3.33, so it only went up only $10 billion, okay? But then, in 2018, the Tax Cuts and Jobs Act, all the changes took place and things started percolating. In 2019, the revenues to the federal government went up to 3.46. In other words, they increased $130 billion in 1 year, all right? Even though they decreased the corporate tax rate, okay?
So what happens if you take that corporate tax rate all the way down to zero like the fair tax does?
And that's our point, because the estimate for 2020, they're still working on that, it went up, the total revenues to the federal government, 3.71. It went up even more, and they're estimating for this year, 2021, 3.86, all right? And again, the drop in the corporate taxes got the economy going. I mean, I used the example, Apple came back to the United States, built a chip plant here, and now their newest computers are using the chips that are made in that plant here in the United States, okay?
And unfortunately, we're seeing some companies like Ford that are now reversing what was happening, and the new taxes are driving them offshore again.
So my point is, even though the percentage of revenues from the corporations are dropping, the actual total revenues to the federal government are increasing. So, like I said, if we dropped them to zero...
Yeah, say, how do we fix this?
Yeah. I think I've heard of this thing called the fair tax?
Yes, sir.
Okay.
I know about that.
Yeah.
and it's get rid. Okay, we're looking at Congress.gov. It is so unstable, the current tax code. It includes definitions of firearms. It includes a definition of municipal solid waste and stuff like that. All of that garbage goes away with the fair tax. You pull it out, you make the people pay the fair tax at the retail level, which is where all of it rolls down to anyway.
Yep.
Currently, you don't see a lot of the cost of the income tax system that's hidden in the prices of things you buy. And it's just so much simpler to get rid of all this garbage and do it with a fair tax.
Yep.
And that's what we're trying to do.
And there's another point that we need to make is that when President Trump first took office, before the tax cuts took effect a year later, he reduced unnecessary regulations. Remember, he put out that edict that he said, all right, for the federal bureaucracies, for every new regulation you want to impose, you have to get rid of at least 2 old regulations that aren't necessary. And so dropping the regulations, making it easier to do business, that had a positive effect. So, easing the regulations, dropping the corporate tax rate had a very positive effect on the economy, and we could see it in many ways. All right, there are many registers, but even the total revenues to the federal government increased quite a bit.
Yeah. So the point is, corporate taxes are invariably passed on to people. Individuals pay pay what's called the corporate taxes. So it's such a drag on business and such a drag on the economy to have a corporate income tax. We just need to get rid of it, which is what the FAIRtax does.
Yep.
And you talk about the lighting off double-digit GDP growth in America, the FAIRtax will do it. Now, we got about 3 minutes to do our call to action here.
Yeah, I'm trying to find my little sheet, but I think we can. Oh, there it is.
There it is. So, you found it.
All right. I've mentioned before FAIRtax.org, the Americans for Fair Taxation, that's our national group, okay? And there are state groups, but the national group is the AFFT. Their website is FAIRtax.org, all right? You go there, and if you scroll down on the first page, you'll see Get Updates. You can fill in your information, and you'll get emails like Bob mentioned, the Chairman's Report from Steve Hayes that comes out once a week. The Grassroots Corner from Jim Bennett comes out once a week. There'll be an email on Tuesday about noon about what's going to be on FAIRtax Power Radio, because we stream our show live to Facebook and YouTube on Tuesday evening at 8 o'clock Eastern. Okay, and if you think this is a good cause, if you think the FAIRtax is really worth investing in, please go to then modify your URL a little bit. FAIRtax.org/1040. FAIRtax.org/1040, and when you go there, you'll commit to sending them $10.40 a month. All right, that's very important to these folks.
Yep. There's something else there at FAIRtax.org people need to look at. It's a list of the FAIRtax leaders by state. We've got states, Georgia and Alabama are leading the way in replacing their state income tax with a FAIRtax style consumption tax. And when that works at the state level, that is probably what people can do more effectively than anything else to get the FAIRtax passed at the national level, is to get it passed in the state and see how well it works.
Yep. And we have a store. We have a FAIRtax store. All right, it's FAIRtaxstore.org. Just simply FAIRtaxstore.org, and you can find a number of promotional materials.
You can go there and get one of these.
Our favorite one. Yep. You can take these and take them to your town hall and ask your congressman, your representative, if they're not currently a co-sponsor, why not? And if they are, thank them. Okay. But there's all kinds of materials. There's campaign buttons, and there's pens and so forth. You can get shirts, and although these shirts we had these made special for
custom made.
Yep. Yeah, these are custom made. So, anyways.
But you can get hats. We need 500 of you at the next CPAC meeting. Of course, we still don't know if it's going to be back in Florida again, or I imagine it's going to be back in the D.C. area, but we don't know for sure. But we want 500 FAIRtax supporters at the next CPAC meeting. So that will be cool.
All right, our website is FAIRtaxGuys.com. You'll find all our recent shows there. Okay, along with we're on YouTube and Rumble and several other media.
And we're out of time. That's going to wrap it up for this edition of FAIRtax Power Radio. I'm Bob Paxton,
and I'm Ron Molero.
FAIRtax Guys reminding you that the FAIRtax is the only truly fair tax, and once you understand it,
you'll demand it. Follow the FAIRtax Guys on social media and their own website, FAIRtaxGuys.com, and check back every week for a new episode of FAIRtax